Hello, everybody. This is True Demon, the Devil's Stockbroker. So I've been doing a little bit of due diligence on XELA lately, and I spent some time with the Discord today, just chatting about it. So this is just kind of a snippet of what we were looking at and what we were discussing. So this is just unfiltered, natural conversation back and forth between myself and the Hell's Trading Floor community as we're digging into XELA Technologies. Which, if you don't know the company, they're a penny stock that's traded on the Nasdaq. They do digital transformation and process automation for businesses, and they also do payment processing and transaction handling. So they're basically in the business world of technology. They help people automate their business processes and save them time, make things more efficient. And they've just had good news back to back to back to back over and over for the last 3 months, and they're selling off anyway. And I finally figured out the reason why. So this is just a clip of that conversation between myself and the Discord. If you want to see the entire due diligence thread that I did on Twitter, I'll go ahead and link that below. Or if that's what brought you here, then thanks for following, and I appreciate you checking it out further. So we'll get straight into it. Hey guys, what's going on?
There's a man.
Hey,
What's up, my dude?
I'm kind of pissed off actually. I'm watching XELA, and after I went back and looked at their key dates, for all of their big bullish announcements, I realized that their short exempts took over like almost all of the retail buying volume. And it's so
Ugh.
obvious looking back in history. Like if you connect all the filings dates and you see when the huge volume spikes were, every single one of those was huge retail buying days, but the price barely ever moved. And I looked back at the short exempts and I saw that like on some days it was as high as 20% of the total traded volume. It's just fucking ridiculous. So I came to just kind of commiserate.
Well, you came to the right place.
Yeah, I'm sharing my screen with you guys if you want to look at it. The volume in Excella since it dropped down below 20 cents has never been higher. It's actually pretty insane to look at. Let me go ahead and just shrink the volume shelf because I was tracking this all the way back till December of last year. The volume up here is almost non-existent. Which to be fair, the company was pretty badly in debt, but this shit that's going on right now is just stupid. So I went and looked back at everything since December, and then back in starting in March, there was some really bizarre behavior on the stock exchanges and the flow. And this first one was when they announced that they were releasing a Class B preferred stock for private listing, basically just to give angel investors preferred voting rights in exchange for a slightly higher premium on the stock. And the sale went really well, but the stock sold off anyway. There was a lot of investors that were interested, but it went down 20%. And that this is the Class A stock. It's not even tied to the Class Bs. So the Class Bs sold at they sold at a I actually don't know what they sold at for. I'm not entirely sure because it was a private offering, but it raised the capital that it raised their capital target, so they got what they were asking for and they got runway cash. They announced the closure of the listing and the stock popped for all of about an hour and then got crushed again after hours. And it just hasn't done anything. It's just been getting obliterated this whole time. I was watching this stock to see if it would pop over 48 cents, and it did after hours a long time ago, but then got crushed, so I'd never got into it back then. And I waited a while. And I finally just bought a position. I finally got a whole bunch of calls for next year. I've just been watching this thing get murdered in a dark alley somewhere. Ah, yeah. Thanks, Mo. For those who are just listening in the headset, the ticker symbol is X-Ray Echo Lima Alpha, XELA, for XELA Technologies. They're currently trading at less than 12.5 cents right now. 12.5 cents. And you can get warrants with an exercise price for $4 for 1.2 cents. And they don't expire until September of 2025. It's a private offering, so your broker might not offer those, but they're there. And ever since this thing went down below 25 cents, that's when the volume started getting nuts. And I'm just watching this thing like these motherfuckers, these fucking market makers.
Do you think it has any hope for it?
You're coming in a little bit quiet there, Goose.
Sorry about that. Do you feel like there's any hope for XELA?
Well, considering that I recently bought a position, yes, I do. I do have faith that it's a good company. The news on it was very good. They got an almost $140 million 5-year contract with XBP, and that adds like I believe 5% on top of gross revenue. So they just had a huge boost to their revenue with a single customer. I'm just like, what the fuck is happening? It doesn't make any sense to me. It doesn't make any sense that the stock is just not trading. Every time it lifts up on days like this, after hours, it gets smashed the next day. And I feel like these are late settlement on short exempt orders that are covered. Like this one, this thing rocketed. The volume on this, one candle, 55.225 million shares traded in a single hour. And this was on the 2nd of June. If I go down to the 15-minute, I wonder what that looks like. 2nd of June, 2nd of June, 2nd of June. Oh, yeah, single 30 minutes even. Almost all of that, a good 60% of that volume, 22 million. 22 million of that volume happened in a single 15-minute trading period.
How much did that move the stock?
It moved it from all of that volume moved it from, let's see, this thing opened at, it moved at 25%, and then it got murdered 30 minutes later, and it went back to where it was the next day. This happens every single time that good news comes out. XELA has been very good about posting its announcements and communicating with its investor relations. I actually sent them an email today to talk about some of this stuff and ask them, like, are you even paying attention to what's happening? Your company is being targeted, and I'm really, like, I don't think they have a clue what's going on. The companies like this, they have no fucking idea that they're getting slaughtered in the stock market because of greedy fucking market makers anymore. And people blame hedge funds for going short, but their short interest isn't even all that bad. Like it's like 8%. It's high, but you know, you kind of expect it for a company that has this much debt and has been selling off. But like the on loan is what's ridiculous, and the short exempts recently have been stupid. They've just been absurd. I can probably pull it up here and give you an idea of what I'm seeing. Hey, General Disarray, will $1 calls be worth anything? I don't know, dude. Like, I wouldn't do anything less than January of next year, to be honest with you. This thing has a long way to go, and I wouldn't even buy calls, honestly. Like, I wouldn't buy any fucking options on this. If you're gonna buy anything, it should be shares and it should be from a lit exchange. But I can't tell you what to do. It's obviously it's not financial advice. But right now, the only thing that will save this company is if orders get routed to the lit exchanges. Look at this. I didn't even notice the order book. The after hours order book has a 50,000 share bid at 11 cents. I don't know if you'll be able to roll out those calls. The bid and ask on those is just gone. If you're gonna get anything, I would probably go out to January of next year or 2024. But if you want to help this company at all, like, you got to buy shares. That's the only thing that's going to save it. Because right now, this is. I have a feeling that market makers are just they went and made a magic wish from the liquidity fairy, and they're pulling out millions and millions and millions of shares out of thin fucking air right now.
I think that a $50,000 order adds up to about $5,500.
Yep. Yep, that sounds about right. That's pretty close. If I look at the short interest on this thing, the free float on loan is 13.9%, and the shares on loan is almost 60 million. But if you look at short interest, or short exempt, it tells you something that none of the other chart data will tell you. Look at the fucking short exempts. Every single day there was a good fucking piece of good news. That entire week, the short exempts were obnoxious. They were just absurdly huge. That only happens for one reason, and that's when the market makers are trying to keep retail buying from moving the price. It's controlling the price. And then when people get disappointed when it doesn't move in their favor and they use shorts and send those to the exchanges, it kills the NBBO because they attack the bid. They take and bid and take and bid and take and bid over and over and over again, doing like they'll do like 100 or 1,000 lot orders for shares. They'll just do even lot orders and attack the bid on the exchanges, and it drags down the NBBO, and then they chase the ask in order to keep the spreads tight, and that moves the market price down consistently. And they can do this over and over again. Look at how perfect the channel is, where it's been selling off by like half of 1% every single day. And you'll have one green day or maybe two green days in a row, and then it immediately collapses and it's back down to where it would have been if it stayed on trend. And no amount of retail buying pressure has an effect on it. It's because people are not sending their orders to lit exchanges. I've been screaming about this for over a year now. It's so exhausting. You have to send your share purchases to the exchanges. It has to go to NASDAQ or it's not doing anything. The market maker can just go and pull the liquidity out of somewhere else. You get price improvement, but at the sacrifice the fact that they just move the price down against you. And this has to be an en masse thing. Like, it's not just like one retail order of 1 million shares is going to do it. No, it's got to be thousands and thousands of retail orders going to the exchanges and consistently hitting the ask. That's the only way that this moves the stock price. As it currently stands, there may be hundreds of millions of paper shares or IOUs in existence on this thing because of all these short exempts that they've been able to continuously kick out on loan. And now they have a whole bunch of open call contracts that are damn near worthless that they can claim is providing them guaranteed access, air quote, to shares that don't even exist. Is XELA on the delisting calendar? That's a good question. If you can get me the delisting calendar, it would be in August. They can request more time, but I think that it is due for delisting in August. It's been trading below $1 since February. This is an easy target for market makers. It's a company that doesn't mean anything to retail investors. People won't know about it. It's an American company, too. They're based out of Irving, Texas. It's funny enough, I know somebody. I have a friend that works in Irving, Texas. Not for this company, but just happens to be there. It's a busy place. Look at how many times utilization has touched max, and it's been a. It's funny. It's if you were to draw this like a symmetrical triangle, or I'm sorry, an asymmetric triangle or a wedge with a flat top, it would actually look a lot like a chart pattern.
Soon it will break over 100% if we follow that pattern.
Yeah, soon it'll break over 100%, but we won't know how high over 100% because you can't be more than 100% utilized, right? Right?
Nice.
So maddening, dude. Look at this. Every time the short exempt spike like this, that's when the on loan gets really high, and then it starts to trend down, and then it spikes the short exempts again, and then it starts going up again. Because they have to take these. If the price doesn't go down quite enough, they have to borrow shares in order to cover the failures to deliver. And that's where the limitation comes in, because market makers have an obligation. See, here's an example of that case. So here's the short exempts over in this highlighted cluster down here. And then after that, that's when the FTDs start to roll in, and they roll in pretty consistently. And that's when they take these shares out on loan to cover these failures to deliver temporarily. And then once the price gets down low enough, then they'll short exempt it again. They'll cover their older short positions, and then they'll just hold them as FTDs again. And they'll do this over and over again. Right now, the price, they're having a hard time holding it this low, though, and the on loan is going higher and higher. And after this week, like this huge spike in short exempts this entire week, if retail steps in and starts buying from the exchanges and starts bidding the price up, then the market makers will have to cover at a loss. But it's got to go up to 30 cents or more. You could put all of these short exempts as bad failures to deliver if the price gets above, let's say, 20 cents. But for the market maker to really feel any kind of pain, it would have to be 30 cents, and it would have to stay there. This is the kind of thing I'm fucking talking about. Like, the company has no idea what's going on. They're just like, why does nobody like our stock? It's like, plenty of retailers like their stock. There's a Reddit community for XELA stock that's got more than 6,000 members. And on StockTwits is more than 10,000 watchers on it. People watching this stock consistently for new news. I'm willing to bet you that if XELA had a way to track the feed subscribers on their IR page, they would have at least 6,000 people watching their news releases. Even I've been paying close attention to them, and it's like I haven't been invested in them until recently, but they were so oversold, and I keep seeing bullish divergence on the RSI that it's like, why would you not? And there's a big cluster of bullish engulfing candles here over the last month. As soon as it crossed below 15 cents, that's when the demand went through the ceiling. It's not a coincidence. There are buyers down here. People are interested in this stock. They see some opportunity. And that $136 million annual revenue for their contract with XBP, that's attractive. And they deferred $150 million of debt to long-term debt with PNC Bank, and they got a $6 million annual savings on their interest rate. So they literally were able to offset. I'd have to look at the financials for the exact numbers, so hold on a second while I go ahead and pull it out. See, the total current liabilities, that's short-term debt, is $167 million, but that's out of date. So they were able to defer 90% of this debt. This short-term debt has been deferred to long-term debt. So, yeah. Now they're going to be paying a drastically smaller interest rate. They don't have to pay off the loan for several years. They got plenty of time. They still have some shares available to dilute, but they're not going to right now because, well, obviously the share price is so low. Why would they? And they were willing to buy $100 million dollars worth of stock at $1.25 back in March. Their stock buyback. What was that? Let me go pull the date up. I have all this marked out on my chart. Here it is. Yeah, the day that they announced they were willing to buy $100 million dollars worth of shares at $1.25 each, their stock went, it opened high at 41.5 cents. It went as high as 42.7 cents. And then it immediately started falling the rest of the week. And it was below its Friday low Tuesday 2 weeks later. It's just like, what the fuck? Yeah, we'll buy $100 million worth of our stock. We'll pay you like twice the price to go get those shares back. And they did, and the stock moved like 1 penny. Are you fucking kidding me? This is why I'm frustrated with this one. Is anybody else here invested in XELA that's been tracking this stuff closer than I have?
I was last year, TD, and I think I got in at like $3 and noticed the downtrend and got out.
If you don't mind me asking, I'm recording the conversation, by the way. So you don't have to say, but if you don't mind letting people know, how many shares did you buy at that price?
At 500.
Like 500. So your notional was like $1,500.
Right.
Yeah. And now that's like nothing. Did you get out of your position?
Oh, yeah.
Okay. I hope you were able to get out intact at least. But I'm looking at this price and it's like a screaming buy to me because the company is announcing repeated good news, new contracts, deferred debt. They've got preferred stock now. They got a large array of internal insiders that are buying stock, and they've got angel investors that are continuously putting money into this thing. Their net income year over year, their profit margins are improving slowly, but they're getting there. I'm willing to bet that with that new contract with XBP that they'll finally post some profitable earnings next year. So I guess nobody else is looking at XELA right now, or people are too afraid to speak up. I don't buy it. Yeah, I'm not like screaming at anybody to buy this thing because it's obvious that the company is being defrauded. But like if you want to talk about AMC, GameStop, naked short scenarios, like this is an example of it. This is what it is. It's what it looks like every time. The playbook doesn't change for these dudes. The market makers have the same approach. This is a lot like Mullen, as a matter of fact. I wish I could see the short exempts.
Well, it's a playback that they've been using for God knows how long to make billions of dollars. So of course they
Yeah.
use it over and over again.
The market making strategy for this, I'm sure, hasn't changed since like 2003. When what was it? When did Citadel become a market maker? They became a market maker. Oh no, they became a market maker after 2008 crash, didn't they? Or were they already around?
No idea.
No idea. Fair enough. Well, anyway, I see all this volume traded here, and you know what? I'm just gonna go load up the bags. I'm just gonna load it up. Shares only. That's what I'm gonna do. Y'all don't have to follow me into nothing or anything like that. I don't even recommend it. Just because
So
it's
sell the kidney.
sell a kidney. Yeah. The I am ungodly frustrated though with this bullshit here. Wow, fish. That's quite a position. I won't state it on record, but that's quite a bit. That's okay. Yeah, that's in cents. Okay, I was like, wait, what? Have you been holding this since IPO? About to be like, damn, I didn't know that it was that high when it IPO'd. I guess it's been even higher than that, hasn't it? Jesus, this thing IPO'd at it IPO'd at $31.68. God, you think about all the people that got shares of this thing back then and just got murdered. Wow. Well, they're finally doing something. Like they're finally talking about how profitable they are. They finally have a good case for their for the value of their stock, and nothing is happening. It's just disappearing into the ether. Apparently, it's hit its last liquidity pool at this point. I don't have any other. I don't have any other levels below this. The only thing that I have as far as technicals for how far it could fall is it's been trading in this channel for a while, and the next step for it would be to bounce off of the top of it before it takes off again, but it's already beyond the channel's range, like below 0 cents. Like it can't go any lower. Par value for this stock is 0.0001. Would it make a difference if retail were to buy PM and after hours? No, I don't think so. Because your orders are going to be filled. You could get filled at the exchange, but you'll get filled in after hours, and it's probably going to get routed to an internalizer. The you could keep buying at these levels and try to route your orders to the exchanges. But the next step at this point would be to just attack the ask in the morning and or just whenever it's daylight hours and routing to the exchanges. That's the important part. As long as you get filled at NASDAQ, that's what will affect the NBBO. But it's it's not likely to have an effect on the price otherwise. So if you buy after hours from a broker that routes orders through Citadel or Virtu, or just generally takes payment for order flow, then you're going to get you're going to lose all the buying power that would otherwise be sent to the exchanges. There was something else actually. Scrap Queen was doing. She's been covering this stock nonstop. She actually convinced me to buy it just with all the awesome data that she had on it. Like all good news, excellent improvements on their profit margins. The new data from their the new contracts that they have rather, and the deferment of their debt. It was all great news. And I'm just sitting here with my thumb up my ass, watching the price bleed away. While market makers run away with my money, giggling like fucking demons. I gotta find this screenshot. Hold on. Man, why can't I find it? It was a screenshot of the dark pool flow. Here it is. I found it. Todd Bigsley actually created this. He found it for me. 93%. 93% of all volume is going off exchange. Only less than 2% get executed on the NASDAQ, and less than 2% get executed at the New York Stock Exchange. 93.2% of this stock gets executed off exchange. Need I say more? Need I say more? It's so stupid. This stock is being obliterated. And this was back on the 31st of March. This was when they had their highest short exempt date. I wonder what this will look like if I go to Chart Exchange. Let's see. chartexchange.com. Show me the magic. Let's go do some DD, guys. XELA Technologies. Statistics, average 10-day volume, 233 million shares, average 30 days, 107. So their 10-day average, they're trading half their float. Jeez. Where's the rest of this? Exchange volume. Oh, there you go. Today, 72% of all the trades were executed off exchange on an ATS or a dark pool. Between NASDAQ, NYSE, and IEX, less than 8%, less than 8% of the trades. Or, I'm sorry, not 8%. Let's see. NASDAQ, NYSE, SIBO, and NYSE American. It's like 15% of the trades, maybe 20% of the trades actually traded on a lit exchange. And most of it was SIBO anyway, so a good half of that lit exchange volume was in the options market anyway. Let's actually look at this on the history of it. Off exchange trading ever since September. Oh my God, what? Is that real? Is that number real? 327.6 million off exchange traded shares on the 22nd of June. Does that coincide with the short exempt spike? I need to see this. I got to go back and do all of my other due diligence. There's an XELA thread, by the way, guys. If other people are interested in this, you can check it out at XELA is the thread. You know what, C-Dub? That's a good question. I don't know what that is. I don't know what the normal volume is for a ticker like Apple, but let's go find out. Let's go see what Apple's exchange traded volume is like. 44% is traded off exchange. 23% is traded on the NASDAQ alone. Dude. What the fuck? Yeah, 61 to 41 is that's pretty legit. And I would expect there to be some off exchange volume for a giant blue chip like this. That makes sense because most of the big trades are happening in dark pools anyway so that they don't have a massive pull on the price and don't cause unnecessary volatility. 59.41. Okay.
That brings up an interesting point with XELA with the dark pool.
You're coming in quiet, man. Would you mind turning up your microphone? This is recorded, by the way, just in case you didn't want to be on record. Fucking 72%. It's just insane.
All right, that's my output all the way up. I don't know if it's any better.
That's pretty good. You're at least getting picked up.
I was going to say, with the dark pool volume mounting, do you think that's potentially institutions doing dark pool trades so they can absorb it and not move the price? Because the institutions have been moving their percentage of the stock that they hold up. It's been going up since January.
That's interesting. That would make sense. If they're trying to get filled at these super low prices, yeah, I could believe it. This is why I say retail needs to have conviction in its trades and not get scared away by these situations. Because if there is an institution that's like, yeah, we're going to buy this company, absolutely, but we're not going to do it at $1 where it deserves to be. They're going to do it at 12 cents if they can. They'll do it at 10 cents. They'll do it at 1 cent. Whatever they can drag it down to, they'll get it executed at those prices if they can. Yeah, the Apple executions of large block trades on dark pools, I could believe that. It makes sense. It makes sense to see large orders like that getting covered on dark pools for a blue chip. it doesn't make sense for most of those trades to be happening on dark pools for a penny stock, which is traded on NASDAQ, but like even so. 511. There was a significant date after that. Yeah, the failures to deliver on this was 4 days, 4 trading days, or T plus 3 actually. T plus 3 after this day. These 2 days, there were 1,039,390,000 short exempts on May the 9th, and then May 10th, 2.45 million short exempts. And then lo and behold, on T plus 4, FTDs were. Oh, my FTD chart got cut off. But, well, this was it. So all these big FTD spikes are being caused by short exempts. If retail started like just hammering the ask and just buying nonstop, they would not be able to supply the liquidity. They're pinning this price down here just to get good fills. That's one possibility. The other possibility is that somebody very malicious is trying to get the company delisted, so they're holding its head underwater until that finally happens. I see it's getting a little bit of action after hours, which is kind of nice. But that pretty much happens every single day. If it's going to have any good volume, it's going to be after hours. And then it shoots up in the morning, and then everyone gets excited, and then they hit their buys early, right away, chasing the price. And then the market maker's like, ha ha, psych, rug pull, brings it back down to where it started 3 days later. Just like right here. Hit the high, 65% gain. And then 47% loss. Yep, that's the game. Hey, Baloney. Yeah, I could take a look at GMVD. GMVD is another one that I've been watching closely for all of the same reasons. Let's go take a look at it. Here's GMVD, G Medical Innovations. 78.9% today. Just today. $24 million on the 13th, 11.3 million on the 21st. Look at these numbers. Look at these numbers. It didn't even touch that. Like, it didn't even touch 7 digits before that, ever. And then all of a sudden, from the 10th onward, consistently, we're having at least 1 million in off-exchange volume. I do like that stock where it's at. It's got good lift on the price action. Since we're talking about these extremely shorted companies, or the heavily short exempted ones. Yeah, this is what GMVD did. So here's an interesting move. It's kind of echoing what happened back here on the 9th of June and the 10th of June. So what I would expect to happen is for this one to get smacked again and touch this price. This will be one of the last ones. If it gets smacked tomorrow, expect it to touch 49 cents. You can set some limit orders there. There's a possibility, though, it falls all the way back down here and forms a double bottom. There's going to be a liquidity rate on this one. They've been dragging the price down consistently, so it's still too early to set limits for sure. The price looks like it's lifting right now, but mark my words, they're going to slap it again. GMVD, if you want to average down, not financial advice, but if you want to catch the institutions when they make the move to lift the price, you need to have limit orders here and here, and these are where they're going to send it to. You have to be a little patient with these. They're dragging it back down to go get their fills. So if you want to get in where the institutions get in, that's where you should be setting your prices. I'll go ahead and publish this on YouTube as well, since y'all have been so kind as to hear me rambling. If you want to be on the internet, you can say hi.
Hi.
Thanks, J. Ruff. That's one. CEAD is another one where they've got a whole lot of volatility. I would be setting limit orders down here. By the way, for those in TV land, if you're curious about Hell's Trading Floor and being a part of the conversation here, right now it's a little bit one-sided because everybody gets scared of me when I walk in the room. But we have alerts here for the professionals and the veteran members of the trading floor. So if you guys upgrade to the next level, you can get access to these alerts when they happen in real time. I always set these up for everybody on all the plays that I'm watching on my watch list, and it gives you heads up on the technical patterns. So if you didn't catch what I wrote down in that alert, what I'm looking at is this volatility, for this volatility to kick up and for the market maker to drag the price down. And when they hit this level, they're going to rapidly spike down and hit these liquidity pools, is what they're called. It's basically anywhere where the price has had hesitation or hit support before. There's a whole bunch of orders that tend to be waiting down here as stop orders and limit orders to sell or for shorts to cover. And this is where market makers, they can see those orders. They see them. We're guessing where they are, but we have a good group of them all in this area. This is a huge area of demand. And what they'll try to do is drag the price down continuously, and then you'll get a deep wick that just cuts through all of this, and then a rebound candle. And it usually happens within 10 minutes. It'll happen, that big drop down will happen in a 1 minute candle. You'll just get like slow bleed, and then all of a sudden, bam! And then within 10 minutes, the price will end up recapturing its previous support. When you see that, that's your buy-in. Because when it recaptures that support, that's a signal that the market makers are going to take it in the other direction. So if you want, I'll just quickly draw this out for you. You'll have the price just slowly going down, going down, going down, and then one candle, one very deep wicking candle, and then a really rapid V-shaped recovery, and then maybe another dip into it. Occasionally, you might get one more. But as long as it recaptures this support within 10 candles, that's your signal. And then you go ahead and you go long on that. And that's how you trade a liquidity hunt or a liquidity raid. You set your stop loss below you set it below the wick of the candle, and you can swing these types of positions. You can swing them for very long periods of time. You would typically do this for, like, if you see that big deep wick, you basically wait for that wick to end. You set your stop loss below it. So whatever the wick is, put your stop loss right below that wick. And then wherever you see resistance on the main structure, I like to look at it on an hourly time frame. You see, here we go. Here's the overall structure way up here at $3. So you set your limit for your take profit all the way up at that next level of support, or maybe just a little bit lower, just to make sure that you get a fill. And you can get like a 5-to-1 or a 10-to-1 risk to reward ratio on these volatility plays. You just have to watch for these opportunities and be very careful. You got to wait for that confirmation. The confirmation is what's important. Right now, this thing is very volatile, so it may not be the right time yet. But you see that we're trading in this big bouncing structure going between these two ranges. For whatever reason, it bounced up above in pre-market. But what they're doing is taking the price between support, resistance, support, resistance, support, resistance, and then they drive it below support, gather up all those stop orders, and then they send the price in the other direction. And that's precisely what they did here. They drove it below support, and then they sent the price up after hours. And then they go ahead and fill some stop orders there. They let people take their profit. They take it down the other way. That's how institutions trade. You got to trade like an institution, and that's how you make some real good money in this market. So hopefully that helps people look for some opportunities. XELA is one such example where there's a liquidity hunt happening. They drove it down in the morning here, and if it recaptures support here above 13 cents before the end of day tomorrow, then there's your entry. If you're waiting for confirmation, I am not. I'm not waiting. I've already got mine. I know where I stand on this stock. It's I'm willing to take the risk to move with the market maker. I see volatility happening. The 1 hour chart shows me that there's crosses happening on the 20 and 50. For the daily chart, you would want to see the price like recover all the way back to $1.50. That's not going to happen in any slow move. It's going to be volatility or nothing. And if you were looking for some indication that there's volatility that's going to drive the price that high, it would be these giant volume candles. You can take a look at what XELA did when it had a big volatility pop after it hit support like that before. This was another liquidity hunt, I can tell you that. The structure started, I'll just point this out to everybody. Here is one such structure. You have the price bouncing between support, resistance, going into these areas here, and then suddenly on these deep wicking candles, you get a big recovery. This was happening on a daily time frame. Normally, you see these more clearly on an hourly time frame. Let's see if I can. I'll see if the structure shows up a little bit better here on the hourly. Yeah, this one's kind of an asymmetrical structure, so it's a little bit tougher to see. But the structure starts right about here. See the last big swing move? That big impulse move started a new structure. It's really difficult to see because this one's asymmetrical. It's not a perfectly symmetrical structure. It's easier to see when it's bouncing between two price levels that are at the same level. Like, there's really no good examples here on XELA's stock. But, oh well. Anyway, these are the types of moves that I'm talking about. Like this is a asymmetrical structure. You've got price levels that are getting lower and lower and lower. You would probably call this a descending wedge, actually. So this is an example of an asymmetrical structure where support's getting lower and lower and lower, as well as resistance getting lower and lower, and the price consolidates like this. Right before they take the price up, they'll drive it down, hit a whole bunch of stop losses below where people are expecting it, and then they'll send it skyrocketing to the other side. Then they'll fill their cells and send it back down. And here's a symmetrical structure. It's smaller, which is good, but here's a symmetrical structure. Right here in this range. See the price bouncing between these two levels, just going boom, 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 boom. They start trending it down here very briefly, and then they swing the price up rapidly and then send it down in a single volatility spike. Now this one is not a liquidity hunt because it broke down and kept going. A volatility hunt would have done, or a liquidity hunt would have done the opposite. The price would have spiked down and then gone up. Kind of like just faking people out. I hope I explained that well. It becomes a little bit complicated, and trying to find it in real world examples, especially on something like this, it's so heavily manipulated, it's really difficult. But oh well, best I can do for an explanation. If you guys want to learn more about liquidity hunting, I have a video on my channel, and when you get to the end of it, there's a video that I strongly recommend watching. That's called the secret of the market makers, or the secrets of the smart money. Liquidity hunting, or liquidity rating, or liquidity clearouts. All different words for the same thing.